Maybe I should have had a few pints of beers, No, but hey, look, thank you for the opportunity. And being part, of course, the inaugural podcast. I don't know if you decided on a name for this, but yeah, always good to be the first one. So yeah, looking
No,
forward.
yeah, look, I haven't decided a name for this. So for those of you who are listening now, well, thank you. This is the first episode or first whatever. It could be the only episode of the FundKernel podcast. I don't know.
Hopefully
Uh,
not.
I don't know if anybody's listening. If you guys are watching, if those of you who are watching, thank you. Thank you for joining us. But if nobody's watching, hey, we can talk whatever we want, right? So yeah, so this is the first episode. And look, today, in this first episode, I'm very happy to have Rahul from Krypton Fund Services joining us. I'm not gonna steal his thunder and tell you what Rahul does. I'm gonna let him speak to that. But I just wanted to kind of get him on. I want to thank you very much for coming on to this podcast. Thank you. Yeah, so look, let's kick things off. Why don't you tell us something about yourself and what's Krypton all about?
Yeah, no, happy to. And thank you again, for the opportunity. And also, welcome to all our listeners. So I'm Rahul Dubey, based in Singapore. And I look after sales in the region for Krypton Fund Services, which is a fund administrator. So we started just around 6 years ago, with a handful of staff. We started in Bermuda. And since then, we've grown to over 70 staff, over five offices worldwide, including Mauritius, Singapore, and Malaysia. We are similar to a lot of other fund admins, covering a lot of the classic functions. But yeah, client servicing is, a priority, something that we heavily emphasize on, and would be keen, to explain that in more detail. Some background about myself. I've been in the business for 12 years now. Started my career in 2012 selling performance data on hedge funds at Eureka Hedge, before I moved, to the buy side marketing funds at companies like UTI International and Swiss Asia, just to name a few, covering a mixture of both public and private market strategies.
Okay. All right. When did you move to Krypton now?
Yeah. So I just started in October last year. Yeah. So it's been a very interesting, journey to date, just meeting with so many managers, vendors, and also, getting to know, a lot of my peers as well, how the models are different. It's kind of like going, to a restaurant, right? What would you feel like having? It depends. Some people like Italian, some like Japanese, and the fund admin space is so dynamic and so interesting. Depending on who you ask or what your definition of a fund administrator is, you have at least 50 to 60 here in Singapore using a lot of different strategies, models. But it's interesting. Everyone has got an interesting story. So yes, definitely enjoying the journey so far.
Yeah, cool. So look, for those of you who doesn't know, I mean, the way Rahul and I met, we've only met with each other for the past 3-4 months. And I decided, so I'm the COO and co-founder of FundKernel. We're a digital alternative investment platform. And the reason why I reached out to Rahul is because for us, working with a lot of emerging managers, I think there's a lot of synergies between what we do and helping them getting investment and getting connected to capital allocators and what fund administrator do, some of the work that fund administrator does. And that's why I want to reach out to Rahul, and we sort of kicked it off right away. Rahul has been very kind to me, taught me a lot of stuff about the whole inner workings of the fund administration system. We had dinner the other time when you were in Hong Kong having this famous Hong Kong barbecue duck.
Oh, yes.
Which is awesome. We got to do it again. Next time I'm in Singapore, you're going to take me to the Hainan chicken place, but next time you're in Hong Kong, I'll definitely get you down to another good barbecue goose place, actually. The one with the lineups, right?
Yeah. By the way, just to clarify on that note, I mean, did we have goose or did we have duck? Because I thought it was...
duck. Is it goose? No, I think we had goose. It was goose.
Okay.
It was goose. I think they ran a little duck. I think they only have like a quarter goose left. We went very late that night, right? It was after the cigar bar. So we went very late that night. I think they were sold out on pretty much everything. And by the time we finished, they were trying to throw us out because they were closing shop and we we're blocking them going home. But hey, listen, I think it's very interesting. I mean, you guys, you talked about, Rahul, that there are like 50, 60 fund administrators in Singapore, but it seems like you guys are one of the newer startup in this space. So it's so crowded, though. I mean, that's one thing that I don't quite, that got me curious. Well, first of all, I mean, do you guys do a lot of crypto stuff because of your name? And number two, I mean, the fund administrator space is so crowded. I mean, why get into it now? I mean, don't you find it's too competitive, or I mean, what's your, what do you think on that?
Yeah, no, sure. No, thank you for that. Very, very good questions indeed. We don't exclusively do digital assets or focus on that. Krypton was a name that,
yeah, how did it come about?
So the story goes that we wanted to come with a name that sticks, right? And hopefully for the good reasons. Yeah, it does, leave people wondering, okay, it's like okay, how did these guys, come up with that? So we wanted to come up with something that was, unique, was interesting, catchy, and at least like, they look at the name cards, or you met someone after the event, they'll think about, myself and others, and like, hey, okay, that Krypton guy, yeah. Hopefully good things to say, more good than bad. But you've touched on an interesting point that, it's already an overcrowded space. I think worldwide you easily have hundreds of administrators. And again, all having different operating models, different fortes. Some do hedge better than private, and vice versa. Some do the bigger managers better than the smaller ones. And the reason why, or at least why, Krypton was established just under 6 years ago, was to assist emerging managers, a segment that you're very familiar with, that you want to, help as well, to raise money to get, the name out there. And we felt that this particular segment has always had, a gap in terms of client servicing.
Right.
Of course, that has, different, everybody's got different expectations. That's fine. But, we notice, like, just looking at just the classic functions, what does a fund administrator do? You do, the NAV calculations, the performance reporting, you do the KYC, you would assist also in the setup as well. Usually a lot of incorporation work is done, by the fund administrators, or in cooperation with corporate secretaries, right? So again, there's so many different models. And sometimes there are these issues about, let's say, NAV estimates coming in late, or there being significant errors, or let's say bank accounts, taking so long, to open. There could be a lot of reasons for that. And I think that, of course, pointing the finger at fund administrators is rather unfair, but they've got to take, responsibility, right? Whether it's ourselves or our peers, I mean, it doesn't matter. But what I've observed over the years from a fund marketing perspective is that there is a gap. And I think that our sweet spot, the servicing managers less than 300 million, right? Just to put a number, just in case everyone's wondering, what is the definition of an emerging manager, or EM for short? Because some guys would say 300, some would say 500. The space in Asia is definitely a lot smaller than it is in Western Europe and North America. So I would say probably 200-300, I think, is an accurate number. Even then, these days, or in the last 10 years, you usually have fund launches that are a lot smaller to start with, right? But there is a gap, and we wish to address that. And that's why, like, the systems we use, that we put together, the team that our management has put together, has done a good job, and we wish to continue building on that. So we would present ourselves as saying that, okay, we're not looking at the necessarily at the largest managers out there, the institutions. They may prefer to work with someone, in all honesty, with a longer track record, a longer operating history, right? And who the big names are, right? That the emerging managers would say that, okay, let's try and strike a balance with a team that is more nimble, like us, one that is smaller, but can sometimes guide us as well, especially if we are launching a new fund, to help them with recommendations on other service providers, like these value add services that we do on top of the classic functions that I mentioned earlier. But as I said, there's a gap. and that's really our sweet spot. That's what we intend to do. So yeah, I think the last 6 years we've expanded to quite a lot of different locations. We do a variety of different strategies and structures. So from the Cayman BVI to Mauritius, to the VCCs in Singapore, to the OFCs and the LPFs in Hong Kong. So we will, of course, continue, to focus on emerging managers. That's what we intend to do. And we welcome anyone out there, to work not just with me, but with you as well, right? Because I think, we are an ecosystem. We are like an extended family, and we should come together and help each other, because if anything, it's all complementary. It's important to mention as well, fund admin is just one piece of the puzzle. You've got
Yeah.
lawyers, you've got CorpSec, you've got, guys like yourself, right? I would say like a platform, right? That is part of the ecosystem that does fundraising, that allows emerging managers, it gives them the opportunity for them to get their word out. Because sometimes, they say like, well, who do you know these guys and how do you get to meet them? Events is one way, right? But of course, a platform like FundKernel is another. But there are other players as well that I need to emphasize that are part of this as well. So, we're part of a really an extended family that comes together to work. And of course, not to mention the multi-manager platforms that you and I know of as well, that have grown very significantly, the last 10
Right.
to 12 years. So yes, emerging managers is very much the theme. And I would say also that every couple of years you see new players, enter the space, fund administrators that want
Really?
to,
Every couple of years,
yes,
there's fund administrators? Wow.
that's right. That's right. I
So
think if you look back, sorry,
so it's like
go
there's
on.
people coming in and out, and or there's still people coming in. I guess it's a huge market, right? And especially from an emerging manager standpoint, I do see there are more and more emerging managers coming out now. I mean, obviously, there's been tough years for the past, couple of years. There were a number of funds shut down, but I think as the interest rates start to come down again, I think more fund managers are now going out there and again explore. But you are seeing more fund administrator coming in, huh?
Yeah, that's right. I think if you look at the research, and also something that maybe most people don't pay a lot of attention to, if you look at, awards, particularly for service providers like HFM, for instance, they've got in addition to the buy side, the fund managers, they've got one
Yeah.
that they do on service providers. And there's an interesting category on fund administrators, right? And if you look also at the, if I remember correctly, they would look at the number, let's say under 25 or 50 billion, right? That you see a lot of these names, new names. So that is it's a good way to kind of look and see over the last 5 or 10 years, the emergence of new fund administrators that are leveraging on this gap in client servicing, like I said, simply because, for a variety of different reasons, maybe there may be some disillusionment about the level of service that's being provided by the incumbents, that they may prefer to do a switch. That's one. Or the other scenario is a lot of these spin-offs, or these extremely talented portfolio managers or traders who are about to embark on this emerging manager journey, setting up a new fund, would say that yes, they're starting out small. They'd want to work with someone, like I said, who's nimble, who's flexible, I think both in operations and in commercial terms, to help them on this journey, to get them started, and hopefully, raise the assets under management, be successful, good performance, and
Yeah.
be a success story. Yeah.
Yeah. But I think wouldn't you agree though, Rahul, that it's interesting because both you and I are focused very much on the emerging manager side, even though I think my definition of emerging manager might be a little bit wider than what you've defined. I mean, we're very focused on managers that between 100 mil to a billion. But the whole reason why FundKernel really focus on emerging managers is because we feel that it's a very underserved market, right? Because if you look at the infrastructure around us today, around asset and wealth management, everything seems to be serving the big guys. Everything seems to be serving the branded managers, and there seems to be a very there's a lot of activity if you're a top tier either wealth manager, fund manager, and all that. But if you get to the next tier, it's still very scattered, right? It's still very scattered. The dots are not connecting, and like you said, the ecosystem is not there. It's not so mature, and for us, I mean, I see that as an opportunity to create this ecosystem around, you know, emerging managers as well as the family offices and EAMs. Now, but what I also find interesting though is a lot of these emerging managers can't really, you know, get in touch with the larger players because they can't really afford it, because of their AUM size. So how, I mean, how exactly do you focus on serving them, and what type of, you know, from what's important to them, do you think, that they can't really get from, you know, from a larger, you know, fund servicing institution that you guys can provide?
Yeah, sure. No, happy to. You know, it really comes down to operations. It just comes down to servicing. If you're looking at hedge, for example, typical scenario, monthly NAV, equity long short, you want to be certain that the performance is reported on time.
Yeah.
And you know, again, going back to the classic functions, right? Subscription, redemptions, you want to be sure that all of that processing is done properly. There's always going to be issues. There'll always be fires you'd have to, you know, put out, and that's okay. And that comes down also to the skill of the fund administrator and the team that they've got, right? I think really it just comes down, you know, to the basics. But of course, to your point about attracting, again, from a fund marketing perspective, the reality is they're going to look at performance. Yes, they're going to look also at the length of the track record as well. Is it all just down to luck, or does that thesis actually demonstrate something tangible that it is showing, you know, the manager's skill, that you know, they're able to demonstrate on a regular basis, on a consistent basis? Yes, of course, they're going to lose money. You're not always going to get a winning trade. That's fine. But of course, net positive is what everyone or every investor, including us, you know, if we were investing our money as well, is what we'd like to see. But you know, it's always a combination. You've got, you know, the operational side of it. You know, it's all about creating that strong foundation so that the fund manager, whether it's their own setup or whether they plugged, you know, to a multi-manager platform, that, you know, they're able to focus less on the operations and more on, you know, risk management and investments, because, you know, that is extremely challenging. And, you know, there's no shortage of, you know, very, very creative managers out there in the emerging manager space. A lot of people that you and I know as well that are able to, you know, deliver alpha, right? But sometimes, you know, there are these other issues. And I think also maybe to an extent expectations that it's like we spoke about this before, it's a marathon, not a sprint. And I think these days, especially with everything that's going on, you know, raising money is harder as well. So I'm touching on a few variables here to answer your question, because it's all linked. You know, you're looking at risk, investment, operations, you're looking at cap raising. I mean, which manager out there doesn't want to raise money, whether you're an emerging manager or not? But at the same time, the LPs are going to say, okay, your service providers, okay, some they may be marquee names that they are very comfortable with, and some names that are emerging, or some names they never heard of, they're not comfortable with, and that's just how it is. You know, you as of course as an emerging manager, then you have to take a call and decide, and sometimes it's done in stages as well. You know, one name that I've not mentioned yet, which is also important, is a prime broker, and the roles, you know, that they perform, that is definitely linked, you know, to the success of the fund, because of all the things that they can provide, right? From, you know, leveraging, you know, to other things, trading, execution, and all of that. So yeah, you know, I mean that you know, it's multi variable, and these things are all connected. And what we would do is, you know, focus on the basics and just get that right, really. I wouldn't overthink and suggest that there's any secret formula. It
Yeah,
really comes down to the basics. Reporting the NAV on time, just to reiterate, reporting NAVs on time, keeping, the errors to a minimum, and also, being responsive as well, understanding the manager's concerns, right? I mean, one of the things that I noticed as well is that, we talk about difference in models, and the fund admins, they all have their forte. Some do private better, some do hedge better, and some do certain types of structures better as well. Cayman, versus, the VCC or Luxembourg, for that matter.
yeah,
And I think you have to understand the underlying business as well. You should also be able to anticipate that. That all really comes down to the experience of the team as well, right?
yeah.
They may be familiar with one jurisdiction, but not the other. And if they're not, and they're not able to think a few steps ahead, there could be some problems that may arise. Then it all comes down to how that is being managed. Yeah.
Yeah. That's really the key thing. Because look, I talked to a lot of emerging managers, and the thing is, a lot of these are really small outfit. I mean, they have like 2 or 3 guys who were very experienced in managing their portfolios. And I think what's very interesting to me is some of these guys used to come from big shops, right? We've seen portfolio managers that used to came out of Citadel, that used to came out of Millennium. They did very well in terms of their portfolio management, and because they were, because they did so well, they decided to come out and built their own fund. But they've what come to realize, though, what they've come to find out is that even though they've worked for these large shop, they don't carry that pedigree along. And when they start building their own fund, the fund doesn't have any branding, the fund doesn't have any of those brand recognition, and they start going fundraising beyond their existing network, and they struggle. But what I find very powerful in my work in helping these fund manager, gain capital, or get connected to capital allocators, is the data. And what's fascinating me about fund services, and maybe you can kind of chime in on this. Look, we've used various fund database, right? There are so many sorts of fund database out there, but not all of them are, updated. Not all of them are updated in a timely manner. There's a lot of stale data in there. But you guys, being a fund administrator, you guys have the golden source of data, right? So and that data is actually a gold mine in terms of knowing who to invest, and it, if we apply certain analytics to those data, we can find out exactly what a fund is specifically good at. But for you, though, your responsibility is to make sure that data, like you said, is updated correctly. The NAVs is updated correctly. So from that standpoint, infrastructure has to be very important for you guys. So what type of infrastructure do you folks have over at Krypton that sort of makes sure that, okay, we stay on top of everything, and if there's any breakage of data, we'll find out? Because I think that's very key to a lot of emerging managers right now.
Yeah, just on that, before I answer that question, in defense of the databases out there, the companies, having worked for one myself many years ago, having understood the mechanism inside out, I would say that sometimes the information presented also depends on what is being gathered as well. The raw data is gathered based on an understanding that we have with the fund managers, and I believe that is still the modus operandi to this day, that they agree to list for free, giving us the data so that the database provider can then populate that information or update it, so that it's going to, and of course then churn certain standard calculations like Sharpe ratio and all of that. But that sometimes depends on the source of the data as well. I think sometimes there are some lags. Sometimes maybe the managers go silent, or they there could be a whole bunch of reasons. But to be fair, and I'd also been a user as well in later roles, that sometimes it depends on the source. But if I may, I just wanted to emphasize that point. But to get to
You're just being a
to answer
nice
your
guy.
question.
You're just being a very nice person. You're being
Hey,
diplomatic. I get it. Don't
hey, come on,
worry.
man. Come on. No, look, I'm telling it the way it is because, I mean, for the guys who know me and, the ones who are listening in, yes, I mean, like, I think to be honest, like, the data providers do an excellent job and they have a role to play. I mean, when you look at Lipper, Bloomberg, to the likes of Eureka Edge and Preqin and others, right? HFM, you need that data as a starting point to do your analysis. It doesn't matter what it is, GP or LP, right? Or
Yeah.
even if, let's say, you're going to write a report. I think it comes down to the source, and that's also important. But I think these guys do a great job. So yes, I am waving the flag here.
Well,
But
I
look,
mean, now that you put it this way, look, now that you put it this way, I'll admit that I was being a little bit provocative. So to be fair, there are over like 30,000 of these funds out there. I
yeah.
mean, to maintain such a large volume of data, it's challenging. It's challenging. And for me to expect everything to be updated in real time and all that, I've put a very unfair metrics to them, that to be fair, and
Well,
you've helped me realize that. So I apologize if any other database guys are listening on this podcast, which I doubt, but hey, if they're listening, I'm sorry. Rahul did a great job at defending you.
no, I mean,
Putting a
like,
good spin on it.
let's hope the
So
hate that. Yeah, let's hope the hate mail, is at a minimum. But if I may, let me address, what you just asked about what we do. So there are a couple of things. One is we're looking at simplicity in terms of the systems used. We use off-the-rack solutions, Paxos, Investran, and others. These are they're widely used in the fund admin industry. These are names that people are familiar with, and in fact, that's also a question that the GPs ask as well. What kind of systems that you use? For us is a mix of off the rack plus something proprietary that we use as well.
yeah,
Something that we've designed just so that all of the information that is collected is the error is kept at a minimum, and all of that is done in a timely manner. So it's a mix of the two. But the thing that I really want to emphasize is experience. That is something which only comes through years and years of experience, from the senior management down to the guys that we have. They are the A team, right? So I would say that if one was going to look at performance attribution,
yeah,
systems is one. As I said, mix of proprietary and off the rack. But I would say experience, because, like I said, I mean, you got to fight fires every day, and that's the same with our peers as well. You run into all kinds of issues, when you have so many parties involved. That experience is what gets things done, and get get it over the line, so to speak. So I would say experience is the one thing. I mean, if I was going to put a pitch or somebody asked, what makes Krypton different from the other fund administrators, excuse me, I will just simply say our team's experienced, and particularly in hedge, um, we've demonstrated we can handle, the multi-strat macro funds, pretty well, quant. And yeah, our team, just, if there's anything, or there are any issues, I mean, happy to always, have a look, run a diagnostic check and give, a series of recommendations as to what we can do. But
yeah.
really, I would say experience is the key. And the same I
Well,
would say for some of our peers, if I may, like they have, especially whether they're big or small, or whether, they are of a similar profile like us, they have hired, experienced guys as well, which I think is why, the clients, still want to use them. Go on, please. Sorry, I interrupted you.
yeah, no, I just want to sort of maybe expand on that point of experience, because I mean, when people hear experience, I mean, what does that mean, right? Well, I have experience, everybody experience, but I think where experience come into play, and I think where experience become important, especially for a fund manager, is not when certain things are good, but when certain things are bad. Right? How you're able to respond very quickly if something were to happen, and how you're able to respond correctly is how experience come into play. And a lot of people don't really factor that in, because the length of time being in business, that's not experience, that's just tenure, right? Fund administrator, I've been around for like 30 years, 40 years, but that's not really experience. Experience is being able to understand the person that you're dealing with, actually have knowledge and actually have foresight to be able to predict certain things that might happen if you operate a certain way. And I think that's something that you guys can actually deliver one time, because when I speak to you, obviously from speaking to you now, your experience just oozes out, right? Because you're able to sort of see, I can tell by how you speak today, you're able to, you have seen through many different situations and how things are structured and the nature of the market. When I speak to Rod, I met with your founder, Rod.
Yep.
He is a very experienced guy. And I can speak to that experience. And just a disclaimer to those who's listening, I'm not getting paid by Krypton, right? This is not a paid podcast.
No, he's not. Yeah.
There's no fee that are coming in. But from my perspective, that's a very key as well, because I always pitch from FundKernel standpoint is also experience, right? Experience is the practicality of our solution. Now, how quickly can we deploy and implement something were to happen? And I think look, everybody can be happy when nothing goes wrong. It's when when everybody can be happy when something goes right. But when some things goes wrong, that's when you need someone with experience to come in and sort of fix everything for you, or guide you to get that thing resolved. And that's where experience, sort of really comes in. And having an experienced partner is certainly, I would say it's a must, especially for the emerging managers. Some of them don't even understand the back office. I mean, some of them are so inundated with portfolio management, they don't see the NAV and all that type of thing.
Yeah, no, and that just brings me back to something that we were just speaking about, where you'd have guys spinning out or having left very established fund managers and starting out on their own, that they don't necessarily are able to they have a certain assumption, right? They would think that, okay, because I didn't really have to necessarily think about certain issues in the past, because it's all taken care of, because they're very well run, right? And they have to be to deliver performance on a consistent basis. It's just it's a different ball game when you're doing it on your own. But that being said, I would say, like I mentioned, I think as fund administrators, as being part of, the sort of the backbone, we want to help these guys, right? Take some of that stress away by saying that, okay, we ensure that we deliver, on a consistent basis. And we tackle the issues as and when they arise. Because, it's not easy. It is definitely not easy. But definitely the journey is rewarding, right? And I firmly believe I'm an optimist, that you get you assemble the right team, and if these you have a model that works, I think you're primed for success. But yes, it is extremely challenging. And I think I actually think that from my experience, again, having marketed funds in the past, it definitely helps when they see your strategy for the first time and see who you are and where you worked. I think that gives them a certain point of reference to say that, okay, this is your story. And it changes from LP to LP as well. There's some guys who are not receptive and some who are. That's just the way it is, and that's fine. But it is definitely a useful point of reference to say that, okay, you used to be at Goldman Sachs, or you were at Point 72, or you worked for Brevin Howard and others, and you're deciding that, okay, you wish to come on your own and do that. I think you've got to salute them for their courage, if anything, because it's not easy. Because effectively, you're doing a business, right? You're running a business. Right. Yes, you're running a fund, but no, there are all these other things as well. So you have to. I know of investors who do respect that. There are a lot of family offices, as that have set up over the last decade in Asia, and they're looking for managers that who can outperform some of their larger peers, but also be able to manage their business that they've got on a regular basis. So they look for these things because they are family run businesses. That's how they've made their money, right? they would, lean or gravitate towards someone who is doing that also in a different way by, running a successful, fund, and hopefully maybe a variety of different funds, because as we know, sometimes you got a flagship and then you've got some other funds as well, separately managed accounts, all these variations they've got. So that is a very elaborate, that is a complex operation, which is not easy, but yes, rewarding, if done correctly.
You know what? You brought up something interesting. We've always been talking, and so far we've talked a lot about emerging managers. You mentioned a family office, right? So obviously family office is a little bit different than managers. How do you differentiate yourself in the family office space? Because I would say, I mean, correct me if I'm wrong. Obviously, you're the more experienced person on this call, but I mean, do you have like these segregation between established family office versus new family office? I mean, is it also based off of AUM? And where's Krypton's niche in terms of serving family offices?
Sure. No, no, happy to. There are a couple of, different family office types, right? You've got the single, the multi, there's even the virtual family office. So
Virtual,
you
how
have
does
all
that
these,
work?
yeah, well, it's essentially being an outsourced, CIO. And I
Oh,
want to add a disclaimer as well that, even within these three sort of categories, there are a lot of, subcategories as well. A lot of multi-family offices are actually licensed. So, you could call them asset managers, wealth managers, a lot of
hmm,
the, essentially they use a lot of different terms to describe the same thing.
yeah,
One would argue that, well, that's not really a family office. Again, I'm not having that debate, but just illustrating that there are different models within the family office space. I've come across, all of them in different ways, over the years. For us, we don't have a particular. For us, we look at it this way. We would evaluate every client. As I mentioned, hedge, is our forte. That being said, we do private strategies as well. But with a family office, we kind of treat them like, like we treat all our clients, the same. We want to understand what the needs are, first of all, right? If it's all, a single family office is proprietary wealth. So then the question is then, is it about performance? Is it about consolidation of, all of the different portfolios they've got, right? And how we could help, so we would do something tailored. Like a lot of other fund administrators, we would work with some other groups as well, because once you have trusts involved, once we talk about, maybe some of them even looking at certain structures, right? Something offshore where there's some segregation. So there are just so many layers to this that we would adopt a very prudent, tailored approach, to do this, because we don't have something that it's not a one size fits all,
yeah,
because of all these nuances. That's what I'm trying to highlight here. Ultimately, we have to, I think, like with any client, whether it's hedge, PE, VC, crypto, family offices, it's all about, okay, let's understand your needs first. Let's understand what you really want. And to be honest, like if if you're happy with getting your statements from the bank or the broker, and there's not much activity, then do you really need a fund administrator? I don't think so. I'm just being honest. I think just doing this sort of blind selling, I think is not right. And it all comes down to what's really needed. It comes down to the complexity. That family looks at, okay, a bunch of real estate, portfolios, right? They have some properties. Okay, that's fine. You dabble in the public markets as well. That's okay. Maybe a handful of funds. Now, I'm very sure that private bank accounts involved as well. And the private banks, they have their reporting solutions as well. In fact, there are, guys out there who do family office administration as well, where, you'd log in and, you'd have all these statements, right? And there's a fair level of automation as well.
yeah.
So, these solutions are available. But what we've done with the family office clients that we've got is that we've sat down and tried to understand, first of all, how are you different? And what is it that you really need, and how we can, then guide them in the right directions. As I mentioned earlier as well, we're part of the same ecosystem, this puzzle. which comprises lawyers, CorpSec and all these other guys as well.
Yeah.
Perhaps, maybe they might be more relevant. But if you're talking strictly reporting, it all depends on really the complexity and what their needs are. If that's if they don't need the classic fund admin, or they don't need a dedicated solution, then I think something simple would suffice. Yeah.
Yeah. Well, okay, that's very interesting, because look, family office, at least in Hong Kong. I mean, Hong Kong is getting a lot of family offices, especially from mainland China, coming in to open up their shop. I mean, there's all these talk about Hong Kong and Singapore competing each other in terms of getting family office opening shop. But to me, it's all nonsense, because look, I think it's like a $15 trillion wealth market here in Asia. Space is
Wow.
big enough for the both hub, right? I mean,
Yeah, that's huge. Yeah.
I mean, this narrative of Hong Kong versus Singapore, I think it's not healthy. I think, Hong Kong has its unique advantages, so does Singapore. But it's interesting to hear from your perspective, because what does family office has to do with, fund services? But it's obviously there seems to be quite a lot there that you guys can do. Now, from our standpoint, we help them find the right investment for them, right? Basically, if you want to connect to me, or to us, especially single family office, we're, like you said, we're ways to get access to these outsourced investment manager services, right? We have over 130 funds on there, different allocation, different type of strategies. And if you're not specifically good at specific strategy or specific underlyings, this is where a fund manager might be able to provide additional value in terms of managing, the family asset. But if I could go back to the emerging manager for a bit. So okay, you work with so much emerging managers in Asia already, Rahul. Maybe you could give us some pointers for those that are listening that are emerging managers that are looking to raise capital. I mean, what would you say? What are give them 3 or 5 points that they can sort of prepare themselves to make themselves at least look investable. What are your thoughts on that? How does an emerging manager make themselves investable?
Well, first and foremost, it comes down to communication, how they present themselves, and whether the thesis is easily understood. What's it about, right? Is it a global macro multi-strat private credit, whatever the case may be? I think it's important that it's communicated clearly what that strategy is about, who they are, and what are their motivations, for setting up the fund to begin with, why they're running the strategy. That's one. I think it's also important to give an example of good and bad trades. I think that sometimes there's kind of an oversell. And like I said, I mean, you can't win all the time. Then there are definitely some down months, that's just the way it is. I think it'd be good to kind of illustrate that as well and explain what had happened and why there was a drop in performance and what was your approach, to recovering that, right? I think that's one. The other thing, back to an earlier point that I mentioned, that it's good to have realistic expectations. It is just very challenging in general. I think even the big managers as well, they have, their challenges as well when it comes to raising money. And again, there are a lot of, different reasons for that. It's a marathon, not a sprint. So I think, it's good to be realistic about that. And usually you have these sort of hurdles, right? You want to get the first 10 million, then the next 20, the next 50, then 100. And, it's good to have, like I said, a realistic time frame, to do that. Certain strategies would be more popular than others. To my point about communication, you'd have to demonstrate that, yes, it's the manager's skill here. That is why I'm asking for these fees. And it's not, based on luck. And that, you can only really demonstrate, over time. You need to have significant market cycles that have to occur, or, to really do an objective assessment, really. I mean, you have to always look at it from the LP's perspective, right? Why should I select your fund and not the other guy, right? I mean, the other thing also is that everybody talks about relative performance. Like, okay, you've done 10%, that's good. but similar funds are doing 20. Well, I would say that it also comes down to the motivation for running your own fund as well, right? Because you have to look at the long term. Certainly, that there are a mix of LPs out there, right? There's some guys who would be like, okay, I'm attracted to the really nice, sexy return, as opposed to maybe a modest return over a longer period of time. That's okay. Everybody has their preferences, and that's fine. But I would say that these are some of the points, I think you have to look at the duration. You have to have a strategy for a considerable period of time. Look at the next 3 to 5 years, not the next 1 to 2 years. You don't want a situation also whereby you select the wrong providers as well.
Yeah.
I do understand that, of course, it's a race to the bottom with fees, right? That is an issue not only in the fund admin space, but with other vendors as well. You'd have, lawyers and others, and, it's all about, um, trying to compress, the fees. And yeah, I mean, that is, a challenge. But that being said, I think you have to evaluate service providers properly. Also understand that, what is the experience of the team? Okay, you're a young team, you're a young company, that's fine, but you guys have collectively done 20, 30, 40 years, right? What kind of strategies have you worked on? What kind of structures, right? Because there are similarities, but there are differences as well. If you're marketing, in Europe, compared to marketing, in the US, Cayman structures, VCC, so
Yeah.
on and so forth, they're all different, right? So you have to look at these things. You have to look at that level of granularity, because there is a lot of money involved. So I think selection of providers also, is important. You've got to look at, all of these things as well, because ultimately they're running a business. A fund is a business, and you want to be sure that it's, successful. So you have to make sure that you've got the right team, and also the right strategy, but also, be plugged to the right environment, the right ecosystem. So that takes a bit of time, a bit of, due diligence as well. So it gives the LP, a lot of comfort, and that you're able to give a good rebuttal as well. If they said, okay, well, why did you choose us and not somebody else?
Or
That
somebody else
maybe it
bigger,
wasn't
or
just
somebody
because,
else well known, right? Because again, look,
yeah. Hmm.
the branded issue is not just for the managers, it's basically across the board. We get asked, who the heck is FundKernel, right? So,
Hmm.
so yeah, how do you respond to that?
Yeah, so I would say that, we focus on our strengths. As I've mentioned, we use the same systems as, everybody else. But, at the same time, it's really the experience of the team, right? Come and get to meet us, let us understand your strategy. As I said, using the family office example, we need to really see what we can, once we understand the story a lot better, what
Yeah.
we can recommend, or what we think based on our experience is the right bank or the custodian to go to open the accounts. Because one of the other issues also is with fund setups is they think you'll be done overnight or maybe in 2 weeks. And we try and tell them that with all the issues that you have with AML and KYC, just in general, among other things, just gathering the data, the back and forth, the drafting of the documents, right? It takes a considerable period of time, and we're here to help you, with that. But it's just important to keep in mind that we need to have a realistic time frame as well. You need to give people some time to evaluate and respond as well, right? I mean, the last thing you want is a document full of mistakes, and nobody wants that, right? So there's a lot of these things that come to my mind that are important. In addition to, of course, the traditional metrics. Okay, this is, what you did as a private portfolio, and you're doing 10, 20, 30% in these different markets. That's good. I mean, of course, performance is going to attract, virtually all LPs, right? But then they'd want to understand the business proposition as well. Who
Yeah.
you selected, why you selected, what are they about? So, like I said, it's all the variety of variables that they have to, to look at. That would be my advice to them. It's good to get to know the space better. Who are the guys and how they're different? Because I mean, it's heavily commoditized. I mentioned, the number of fund admins that we've got. Likewise, with legal firms and others. I mean, what's interesting is that as the industry has grown, in general, especially in this region in Asia, that you start to see the emergence of all these. You see the variation also in the different segments, of service providers as well. and they're all competing, right, with fees, and it's extremely competitive. But that being said, they all have their strengths as well. And the best way to evaluate is to see their client profiles and whether it fits yours, right? If you've never done a hedge fund, but you claim that you do, then that's going to raise, some eyebrows, right?
Yeah.
So I think, there are all these things, everybody has their niche, everybody has their forte. There's something for everyone. I think, yeah, I would say that that would be my thoughts or my advice, I would say, to emerging managers, guys who have just newly set up or guys who are contemplating making that jump, to really run their own business and continue what they've been doing. Yeah.
Okay, well, look, these are very great advice. I think, again, it shows your experience right from the get-go, right? Knowing exactly where you can provide value, where you can provide advice. That's the experience aspects of it. So I'll let you impart on more wisdom on us, a bit more generally. So things are looking up. I think interest rates are slowly coming down because obviously in these past few years, a lot of managers are struggling because everybody says, hey, I'll just put my money in deposit. I'll earn 5, 6, 7, even 8%. But it seems like things are loosening up now. What do you guys see in the capital market in the next 24 months? And lastly, what are your plans for Krypton in the next 12 to 24 months?
Yeah, sure. No, happy to. I think that, well, no shortage of, and there are people out there that are far more qualified than me that can give a more, well, sort of an accurate macro forecast. But just looking at the launches, just looking at all the activity, just in general, the last year and a half, and you're right. I think there's been a sort of a shift or a preference towards money market funds, bonds, deposits. And I think, the accredited investors as well, right? The family offices, the guys that, we engage with, the fund managers also have that view. But that being said, I think that, well, the volatility, even with the rate cuts, and also with the impending, US election, it is just so hard it's a tough call. I think that this is really the new normal. And that being said, I would argue that the guys who were able to manage volatility and do it well are the ones who win. Because just to quote someone who I deeply respect, he told me that volatility creates opportunity. So don't be upset about it. If anything, it's about how you're going to, maybe use that to your advantage, or how, it's a test of how nimble you are, right? I
Yeah.
think volatility is a given. These days, with tech and everything that's available, people get to respond more quickly. And sometimes you never know, like all of these events that occur just result in these spikes, right? Or these drops in, whatever it might be, the S&P 500. It could be an index or maybe a particular stock because of, some adverse, forecasts. So I think that, the volatility is going to be there for a while. And even with the rate cuts, it's not going to go back to zero or near zero like what it was, post GFC. But I think not just the fund managers, but the LPs and including us as well, the participants in this wider ecosystem, would just have to brace ourselves for that. But I guess we'll get more clarity. Just to answer your question, post the US election, in my view, at least I guess, you try and, make an educated guess about, where the markets are going to be headed, and probably what are the sectors or what are the companies, to look at. But again, I'm forbidden from giving investment advice, so I'm going to, leave it at that.
Okay.
But to answer your question about, the last thing you want is, the regulators coming after us, man. So we got to be, careful. Yeah, is we got to plaster that disclaimer as well. Don't forget to do that when you do the edits. But regarding Krypton, I think we'd like to continue what we're doing. Just giving back to the industry by servicing our clients, doing a proper job. Also, hearing those guys out who need help, wherever they may be. And we've got an open model where we are collaborative, right? We're not trying to fight or compete with anyone. If anything, that's a very short-term mindset, and we're not like that. Because hey, like for example, what we're doing together, right? That's interesting. And if anything, I like what you've done, and I'd like to continue building on that, so that we can help emerging managers in a certain way. You guys can help in other aspects as well, right? And let's see, hopefully, yes, we'd like to continue building in Asia. Hong Kong is a priority for us. There are a lot of exciting opportunities. I mean, you raised an interesting point about Hong Kong and Singapore. They both have their own merits. I think pitting one over the other, in my view, I think is not right. They all have their own merits, and they have their strengths. And I think if anything, it's a win-win. I don't think one is gaining at the expense of the other. I think by the fact that we've seen a lot of first generational wealth, you're going to see a lot of family offices in general. And I think also, both Singapore and Hong Kong, they are really, really nice places, to live in, to be at. There's just so much there. Both of them have very established ecosystems, right? Both of them have their strengths, right? If anything, I see a lot of similarities. Like sometimes I kind of wonder what is the difference between the two. But I enjoy my trips up to Hong Kong. Of course, I definitely love Singapore. This is where I was born and brought up. But yeah, they have their strengths, and like you start to see providers and also fund managers setting up shop in both locations. So that being said, I mean, everyone's entitled to their opinion. Not everybody's going to agree with us, right? Or agree with what I've just said. And that's fine, right? But I just think that if anything, there are opportunities to explore in both locations, and we look forward to that. And hey, who better to partner with in Hong Kong than the guy that I'm staring at right now across the screen. So yeah, I mean
Oh,
it's
you're gonna make my
yeah,
you're
no,
gonna make my face red in that sense.
yeah. Well, yeah, no, we got to do more events together. No, but I mean the thing is, yeah, it's there are plenty of opportunities in both markets, and yeah, we just keep that collaborative spirit in mind. That being said, let's see what the opportunities are out there, because I liken this to an adventure. It's
Yeah.
like you're going on a road trip, and hey, it's kind of like when things happen or whatever and stuff, you react to it. But hey, it's all about enjoying the ride, the thrill as well. I mean, so let's see what we can do together. And also, the guys who are listening in, yeah, always, welcome, their feedback and stuff. And yeah, I mean,
Okay.
I'm always, open to a collaboration.
All right. Well, look, Rahul, great to have you on the first episode of this podcast, and great insight as always. What's your coordinates? How do people want to find you? Where can they find you?
Well, no, I was hoping that maybe, you would, no, you would have, flashed, the contact details, the emails, the website.
Okay,
No,
we
but I
could do
guess,
that too, but you could just might as well
yeah,
just kind of say it if you want. I mean, your email address or just the URL. Where could we find Krypton?
yeah, sure. Well, our website is Krypton, fs.com. That's one word. That's where you can find us.
You have any Instagram,
Alternatively,
LinkedIn, or whatever? You guys are you guys very
uh,
large on social or not really?
no, no, well, we are, in fact, no, I mean, well, there's no Instagram yet. There isn't anything, well, Instagram-y, that we want to, put there. But again, it's a different crowd, right? But well, with LinkedIn, I mean, yes, we've got a page. You can always welcome, to follow us. You can connect there with me as well. And yeah, I guess the picture isn't different from what you see in the video, so I think you'll be easy to to spot me. So no, glad to connect. But yeah, I mean, happy to also to wherever this is going to be posted, to also I'll share my details anyways. So like I said, always open to have a conversation, open to collaborate, because I think there are opportunities for everyone, and I look forward to enjoying more of this very exciting adventure. Yeah.
Okay. All right, Rahul. Thank you. Thank you very much. And Look, so it's good to have this conversation with you. Enjoyed it very much. We should do it again, hopefully, if there's a next episode of the podcast, if it continues. For those of you who is interested, you can find us in fundkernel.com. I'm on LinkedIn as well, Simon Wong. So yeah, hey, thank you very much, man. Thank you for joining us.
Yeah. Thanks again, everyone, for listening in, and thank you once again, Simon, for doing this. Yeah, highly appreciate it.
Cheers.